The prediction point trading box is a very simple, easy to learn and understand trading tool that doesn't require a tremendous amount of market knowledge. Yet it is robust enough to attract even the most experienced of traders. So whether you've been trading for a long time, you're really good, and you make a lot of money trading, you'll love this. Or if you've never touched the market before, I would venture to say that you'll most likely understand how to trade the box by the time this video is over. The PPT box is simply a box that forms when specific market criteria is met. In the trading world, the biggest issue in dealing with indicators is that you have to try to combat the lagging aspect of their design. Nearly all indicators available for purchase or contained within traditional trading software is lagging. This means that it uses historical data to plot whatever signal is measuring. So think of it this way. Have you ever tried driving your car while looking in the rearview mirror? This is essentially what traders do when they attempt to use lagging indicators. The PPT box steps outside of the box, so to speak, by analyzing real-time data, or in other words, what's happening right now. Not 10 minutes ago, not 2 hours ago, but right now. Many of you will ask the question of what exactly is it monitoring? Although I can't get into the details of the specifics, I can tell you that as simple as the box appears to be, there are several thousand lines of code that is taking into account things like volume, stacking, pulling, and several dozen other factors of real-time market conditions. So the gist of it is this. We wait for a box to form. This tells us we want to pay close attention to the price area the box has, we'll lack for a better term, boxed in. And then we simply wait for the market to make its move. As soon as price closes above the box, the bar, or candlestick, or whatever you prefer on your charts, will turn blue. And simultaneously, a blue arrow will appear pointing up. This suggests to us there's an extremely high probability price will go up. What it also does is reveal highly reactive price levels we should really think about taking profits at in the event we choose to take the trade. So for those of you who use fib levels or pivots or whatever, throw those in the trash. They're useless. As you can see, the box draws the best support and resistance levels because it's based on real market data, not delayed lagging information. When price closes below the box, the bar will turn red and a red arrow will appear pointing down. This suggests to us there's an extremely high probability price will go down. And then we simply look at the price levels revealed in the dotted lines, which again is our profit targets, or areas we want to potentially consider to get out, and they give us our highest probable exits. Now naturally, you as a trader choose what you want to do, whether that be to get in the trade in the first place, or where to take your profits at. But as you can see, these are very accurate targets. So let's take a look at this in action in the live market, and I'll show you a couple of trades within the last couple of days that I recorded as they happened. Okay, so I'm hoping that we'll get a box. This is somewhat rare. During the RTH, we've had one box, which actually formed about 25 minutes before the open. But we've also had two other signals, both of which are winners. I haven't talked about this yet, but basically what happens is anytime, like in this example, the box gave us an up signal to buy, and that was a winner. If we haven't formed another box yet and price has met the parameters of closing below or above the box, then we'll still get our signals. The bar will turn red, for example, giving us a red arrow down, or blue and a blue arrow up. And so that'll happen every single time before another box forms. And so, oh, okay, here we go. So this is perfect. So this is what happens. I'll leave this up for a second here. So anytime a new box forms, we'll get this pop-up notification, and it'll tell you what chart. So if you've got different markets running or different charts open, you'll hear that signal. So, okay, so we've got our box here, and so what we want to, and you notice I'm not in yet. I have my my order panel on a different screen, and so you won't see that. I want you to focus on the box here and what happens. And so what we want to do is we want to wait for price to either get above or below the box. It doesn't really matter. We're trading futures here. So when that happens, what will happen is we'll get the bar will turn either red for down or blue for up. So again, blue signifies that we want to consider buying, and red signifies that we want to consider selling, or shorting as it's called. So it just really depends on the market. Sometimes this will take a little while, which is, it's really kind of nice because there's no rush to get into the market. Again, what it's identifying is a very specific area in price where the parameters that are set is what it's looking at. And so we want to really pay attention to this. Okay, I got another box on a different chart. Okay, so that was a good example. So you heard that, you didn't see it because I don't have that chart. I've got multiple monitors here, and so that was on a different screen. So we want to be patient. We want to wait, because what's happening is in this condensed area, basically a battle is going on between buyers and sellers. And so again, simply put, we just want to wait for price to close below or above the box, and then we typically, in most cases, we'll have ample time to place our order. Okay, so we'll just kind of wait, see what price does. And then what I'll do is, as soon as it happens, I'll explain to you what I'm doing. Okay, so we're at the top of the, okay, we just broke the box, so we still need to be patient. We don't want to just jump into the market, because we want to make sure that the bar closes above the box, because this could just as easily go down as it could go up. And basically what it signifies to us is that if price is going to close above the box, it's already in momentum. And so what we want to do is we want to ride that momentum. We want to let these guys get eat up, if those that are getting eaten up, and we want to just basically hop on the bandwagon in the direction that the market goes. And so by the bar closing above or below, you know, this thing could go down. I think it might go up, but we'll see. We want to go in the direction of the market. So let's see what happens here. Okay, so we're trying to break to the upside. What you're not seeing on my other screen is I've basically got an order to go long, ready to go. I don't have it placed yet, because we want to make sure that we get a blue bar and a blue arrow. But that's my visual cue. And then as soon as we get that, then hopefully I'll get filled. And you'll be able to, okay, there we go. So there's the blue bar, and
order filled.
Okay, so I'm filled there, a tick above the box, which is kind of where I like to enter. And now I want to place my my profit targets. And so what I'm going to do in this one, well, at least I'll try to, I'll scale out of this. So my first one's going to be a few ticks up. Well, actually, it's going to be about a 1.5. Okay, so I've got, you can't see it because it's a pending order. If I get filled, you'll see it. And then I'm going to try to get a little bit above the green line. So I've got an order just above the blue line, and I've got an order which is my profit target. I'll put it just above the green line.
Order pending.
Okay, so there's my second one. So I'll take 3 out. I mean, obviously I need to get filled. My goal is to get 3 out just above the blue line. Okay, so we're almost there. See if I can get filled in this. And then if this works out, then what I'm hoping happens is that it'll get to the next one. and then take me all the way out with the remaining contracts.
Order filled.
Okay, so there's the first one. So we went past it, so there's a guaranteed fill. And so now what I'm hoping happens is that we continue up. I kind of have a pretty good idea that we will. I've kind of got this cheat sheet. If you hang on for a second, I'll show you what I'm looking at on a different screen. It's just something we use in our method. But if this works out, I'll show it to you anyways. If I get what I get to. At this point, what you're also not seeing is I'm going to secure my entry. In fact, I'm going to get a little bit better than my entry. So if this comes back down, I'll still make money on my last couple contracts. But like I said, I'm hoping this thing will just push up a few more ticks. A couple more ticks is all I need. And I've already secured profit. So either way, it'll be a winner on all contracts.
Order filled.
Okay, so those last two got filled, and it worked out that way. And if you look at the historical movement of these box trades, that a lot of them will get at least to the second one, and then you can see some that run for all the price levels. And we're not trying to get every single tick out of every single trade. We're just trying to make money here. So that's what's really nice about the box, is that it gives us a very high probability area that there's a lot of battle going back and forth, and at some point it's going to break through, and we don't care what direction. We just want to be there when it does, and that's pretty much our job, is just to show up. But anyways, let me show you that that little cheat sheet that I had. It worked out kind of perfectly. But just hang on one second. Let me pull that up. Okay, one sec. Okay, so check it out. This is the prediction point map. This is a literal depiction of what we project or predict what the market will do the next day. And it's very accurate. It gives us very accurate turning points of expectation. And so the trade that you just watched, the reason why I said I cheated was because we had this rise up into the close. So the time frame here, this is in Eastern Standard Time, so New York time. And so we had this rise into the close that we were anticipating. Now, one thing to keep in mind is that it doesn't mean that it's going to happen, but this gives us a very good indication or a bias, and it helps us to really use as a confirmation when we're executing trades. And so basically, without going into great detail, the bottom line is that when we see something on our charts, like you watched with the box trade, and it coincides with other things, what we're doing is we're looking to get the odds in our favor, as many as we can. And so this is something that's contained within the prediction point trading method that we use all throughout the day. So anyways, that's it. I just wanted to show you that because it's another tool that we use to confirm our entries or time our entries, and it's extremely reliable. So if you have interest in the prediction point box, you'll really like the tools contained within the prediction point trading method. They go hand in hand.